For the average Nigerian, making money has always been about survival. But today, how money enters your account, how frequently it comes in, and what it represents is beginning to matter. And that shift has brought new language into our everyday conversations. So we get to hear words like income, enterprise, LLC, self-assessment, VAT, a whole bunch of financial terms that used to sound distant and technical are now part of our everyday life. And the truth is, anyone receiving money in Nigeria now needs to understand them, whether you call what you're doing a business or not. So, come closer. Let's start from the very beginning. What is income? Income is simply any money you earn, not gifts, not loans, not refunds, but money you receive because you worked. You sold something, you provided a service, and so your salary is income. Business profit is income. Freelancing is income. So the moment money comes in because of the value you provided, tax law is already interested. Now, what is doing business? So doing business is any repeated activity done to make money. You don't need an office. You don't need a shop. You don't even need a CAC at first. But then, before tax, you need a number. The number is very important. You cannot pay tax properly without a tax identification number, which is TIN. So how do I get this TIN? You need to go to the Federal Inland Revenue Service TIN portal. You register with your NIN if you're an individual or CAC number if you're business. So you submit. TIN is generated free. Often it takes between 24 to 48 hours, and that is it. Now the question is, what do you file? So it depends on who you are. If you earn salary, your employer deducts what they call pay, which is pay as you earn. You don't have to calculate anything solely on your employer. But if you run an enterprise, now, enterprise, who is this? An enterprise is a small trader, online sellers, POS and logistics operators, you're a fashion designer, hair vendors. So we could simply say one-person businesses. So if you're registered with Corporate Affairs Commission, which is the body that registers businesses, as an enterprise, what do you file? You have to file your annual self-assessment. Now, let's calm down. You file your personal income tax, which they call PIT. That is the kind of tax you file under enterprise. You do it through self-assessment. So what you're doing basically, you tell the tax office how much you earn, they assess it, and you pay it. And this is done with your state internal revenue service, not with the FIRS. So now the next question is, what percentage is taxed in Nigeria under enterprise? Personal income tax is progressive. It is from 7% to 24%, and that we will leave for some other video. So what this means in summary is that you personally calculate, declare, and pay your own tax on your income instead of an employer or an authority doing it for you. So just for clarity, who uses personal self-assessment? We say freelancers. Who are freelancers? Example, content creators, photographer, makeup artists, trainers, online sellers. These are freelancers. Business owners. If you're a sole trader that is registered as an enterprise, you have a side hustle, or you're someone living in Nigeria but receiving money personally abroad. That is to say, anyone without pay deducted automatically. So what else do you file for as an enterprise? You file VAT. You file VAT if you sell goods or services, except the exempted items. So if you collect VAT from buyers, you need to file for VAT. VAT is filed with the Federal Inland Revenue Service, FIRS, not the state. And it is important to note that VAT is not based on company type. VAT is based on activity. So if you offer a service and your customer pay VAT from the total of that service, that 7.5% will be set aside for the FIRS, and you need to remit it monthly through their portal. Failure to do that will attract a fine. So now we go to the company income tax. What is a company? A company is a separate legal entity from its owners. Unlike the enterprise, where the business is you, companies have directors that are separate from the business. So, who pays company income tax? Only companies. And it is being collected by the Federal Inland Revenue Service. So, in terms of company, there are different levels of taxation. Small companies with annual income less than 25 million pay 0% tax. Medium companies with annual income between 25 to 100 million pay 20% tax. And then large companies with annual income above 100 million pay 30% tax. So even if your CIT is 0%, filing is still mandatory. So what does a company file? Company files company income tax annually. They file for their VAT, which is 7.5% monthly. That is if they sell taxable goods and services. They file for their payee if staff are employed. They file for withholding tax where applicable, and very importantly, audited financial statements. So what then is VAT? Value added tax. VAT is a consumption tax charged on goods and services. Who pays VAT? The final consumer pays VAT. So businesses only collect it on behalf of the government. And VAT is paid at the point of sale when goods or services are exchanged. So businesses remit VAT monthly to the tax authority. The VAT rate is 7.5. It is collected by FIRS. However, there are some VAT exempt goods, and so Nigerians must take note. So basic food items, medicals, educational services, your rent, baby products, basic agricultural produce, and a few others are tax exempt. But then, how do you pay VAT? You need a VAT registration number to be able to remit your VAT. So, if you don't have one, you need to get one from FIRS after VAT registration. So, doing business in Nigeria requires proper registration, business name or company. You have to open the right business account and understand who taxes you and what applies. It is a truth at a time. Take care and have a nice day.